Hims just released their earnings and the stock is crashing. I'm going to go over exactly what's happening. I'm going to go over the financials, what they said. I'm going to go over the good, the bad, because there's definitely a both. And I'm also going to go over the future of the company. There's a lot to unpack, so let's get into it. All right, so here we go. Hims earnings Q1 2026, the financials, the good, the bad, and the future. Let's get into it. Please give a like and subscribe. I really appreciate it. So after hours, this is posted the day of, but after hours, it is down 13, almost 14% as of 8 p.m. the day that they released earnings. As you can see, the investors were actually feeling good about it before they released. It was up 3%. Then they released the earnings and it went down 13%. So exactly what did they say, right? A lot of it had to do with the financials, right? You're releasing earnings. Well, let's say this is what their first quarter 2026 highlights were. The revenue was $608 million for the first quarter compared to $586 million for the first quarter of 2025, an increase of 4%. That is not good. I said in my last videos, if they are increasing in the single digits, that's going to get investors scared. It's exactly what happened. Gross margin was 65% for the first quarter of 2026 compared to 73% for the first quarter of 2025. So now your margins have gone down. The net loss, this is big. They've been a profitable company. The net loss was $92 million in the first quarter compared to a net income of $49.5 million in the first quarter of 2025. These first three lines just destroyed them. Right? Your revenue is only up 4%, your gross margins are going down, and you have a net loss, and you're not profitable anymore, right? It doesn't mean you're never going to be profitable again. It doesn't even mean the next quarter is going to be at a loss. But when you release these earnings, this is what's going to happen to your stock. It's going to start crashing. The adjusted EBITDA was $44 million compared to $91 million for the first quarter of 2025. The net cash provided by operating activities was $89.4 million for the first quarter of 2026 compared to $109 million of 2025. So 1, 2, 3, 4, 5. We have the first 5 lines, all negative. Free cash flow was $53 million for the first quarter compared to $50 million first quarter of last year. Cool. But that's it, right? Investors hated seeing that. I looked at their income statement. I give it a D. You have the revenue growing at 4%, but the cost of revenues are growing at 36%. You definitely don't want to see that. Your gross profit is at negative 8%, right? They were losing money. The only good thing out of this was their marketing went down. But why? Well, because they had to take away a lot of marketing. They've actually been doing a lot of readjustments with the marketing, and they haven't, they've had to change how they do their marketing because of, the Novo deal. General and administrative went up 126%. So the total operating expenses went up 27%. Now, I put a blue because, okay, that's not horrible if you're having a really good revenue. That would make sense, but their revenue is so bad, the cost of revenue. So it's just, and the net income or loss was negative 286%, and the EPS was minus 300%. I mean, I give it a D. You could say, why isn't this a D minus or an F? And it's mostly because I know what's going to happen probably throughout time, and I kind of know what's going on. It's still, I was on the brink. I was teetering with a D and an F for real. But one thing that also caught my eye, they had these key business metrics. 3 months ended March 31st. They put 2025 twice. In their earnings, they put 2025 twice. Not the numbers. They just not the actual financials, but they put 2025 here and 2025 here. I know it's just a simple typo, but a simple typo would be thousands spelled incorrectly. Not your year being wrong. That is I didn't change this one. You can see, right? That blows my mind that this got past somebody. A little, I don't like to see that. But here we go. Subscribers went up 9%, right? It's okay. Okay, it went up 9%, but the monthly revenue per average subscriber was up it actually went down 6%. Last year it was 85. This year it was 80. So And I said this in my last video too. You need this price to go up. You need it to go up over 83. If it was at 85, 87, perfect, great. That's not happening. This is probably the biggest one right here. The United States revenue went down 8%. The rest of the world, international, went up almost 1,000%. Great, amazing. It's still a fraction of what they're doing. And if your United States revenue goes down, your United States investors are going to sell. That's what's going to happen. So the total revenue only went up 4%. They need this rest of the world to grow up substantially every single quarter just for it to keep up with the United States. No, that's not what investors want to see. So right here, this is what I just showed you. These first two slides, it's just, this is what it got to them, right? Those first 5 lines of their financial, what do they call it? They call it financial highlights. I couldn't even think of the word because just the word highlights does not match what this was, right? And you have a bad income statement, and then you have this when you're showing subscribers barely going up, but your revenue is going down, the monthly revenue per average subscriber is going down. It's just looking bad. You don't want investors to see all this. Again, the subscribers went up a little bit, right? And you're seeing it, if you go year over year, it went up from 80, or actually, no, sorry. Ooh, I actually circled the wrong one. I don't know how I did that. So, yeah, look at that. That's just not good, right? I don't know how I did that, but 85 instead of 80, right? It's going down. Now, I don't know what they're going to do about that. This is just, it's interesting. Now you're looking at the adjusted EBITDA. And they're saying the scalability of our model enables consistent adjusted EBITDA profitability as we invest behind long-term opportunities. That is true. They're doing a lot of investing, and you have to keep that in mind. But this is also not something investors want to see. Investors don't want to see your adjusted EBITDA continuing to go down and the margin continuing to go down. This is the worst they have seen since 2023, basically, right? Probably the margin at 7%. Now 44 million, that's just barely over that one, but I mean, it's continuing to go down and down the last 4 or 5 quarters. That's not what you want to see. Shift in weight loss shipping cadences presents temporary headwind. So they're also saying this could get still, there's still some stuff that we have to go through, but I do believe they're actually almost done with that, but they still put that in there because, there's still some stuff that has to be done, I guess. Their 2026 outlook for the full year, they have it at 2.8 billion to 3 billion, which is a 19 to 28% year-over-year growth, which, okay, that's all right. The bigger your company gets, the more money you make, the harder it is to continue the growth rate. But, again, investors want to see certain growth rates. You can continue to grow at a decent growth rate, but you're not going to command a high growth PE value if you're not at high growth, but 20% to 30% is decent, right? But this is what they're projecting for the fiscal year 2026, right? And right here you can see international becomes a material incremental growth driver. I do want to keep in mind that all these numbers I showed you, a lot of it did not include eucalyptus, their acquisition and anything that they have with eucalyptus, the money in general. None of this is in here. None of eucalyptus is in any of these numbers. This is their balance sheet. Operating cash flow. As you can see, their cash, short-term and long-term investments has been going down slightly. Yes, the free cash flow went up from last quarter, but when you look at it all the way back again to quarter 2, 2024, it hasn't really gone up at all, right? So the operating cash flow really hasn't either. It was 89 here, 89 this last quarter, 85 Q3 of 2024. So these are the things that investors want to start seeing more growth of. They're continuing to reaffirm their 2030 goals of 6.5 billion revenue and 1.3 billion in adjusted EBITDA. So they're still, it says right here, they have confidence in achieving these financial targets. So that's good, right? If they can achieve that, that's good. Now, what would you guys rather have? The good news or the bad news first, right? Which one? The red pill or the blue pill, right? Well, I like to go bad news first because I want to end this video on a good note. So I'm going to go the bad news first. This is not good. They reported a loss, right? Now they had a few other charges, right? You had the restructuring and stuff like that. You had this change in fair value of liabilities. You had the legal settlement costs. I wonder what that was from, 15 million. Acquisition and transaction related costs, which was higher than the average, right? And then change in fair value of equity securities. So there's all these things that happened that definitely did not help their quarter. You're still talking about the loss was 15% of your revenue. You made 608 million and you lost 92. That's insane, right? And you know, we look back, you got to go back all the way to September of 2023 to show them reporting a loss. Ever since then, they started reporting profits. And of course, investors got excited. People, you know, probably peaking around all this, right? And now you show, okay, 15 and 20, okay, it went from 42 to 15. People don't like to see that. Okay, 15 to 20, okay. 20 to now you're in a loss? You know, I don't know. What are you going to say to investors? Again, the bad thing is again, this whole subscriber monthly revenue per subscriber, the United States revenue going down, like these are big deals. These are big deals. I did a little bit of math. Okay, they do 200,000 subscribers, right? That's how much they gained. They gained about 200,000 and some subscribers. Well, if the monthly revenue per subscriber is 80, and they gained that much, and I looked up, okay, well then they gained this much in the revenue of the rest of the world. Does that mean that they gained 81,000 international subscribers? Because your United States revenue went down. I know you got new subscribers, but if your revenue is going down, that doesn't make sense that you're gaining subscribers but revenue is going down, right? So I'm just interested, okay, where the United States revenue is going down, right? The total revenue went up 4%. But if your United States revenue is going down, that means you're not probably getting more subscribers. I mean, yeah, you took a little bit less, you know, $5 less per subscriber than before. But essentially, I'm feeling like you got about 81,000 international subscribers maybe to sign up. And so that's a lot of international and not US. So it's just a little interesting. Okay, how much are they going to be starting to gain again in the US? They need to start making a move. That's mostly it, right? The margins, we already know too, the Novo, GLP-1, all of that stuff, their margins are going to go down because they're doing the branded rather than compounding. But now let's start talking about the good, right? People want to hear about the good stuff too, so let's talk about it. Hims and Hers to stop offering the copycat Wegovy pill. This was February 7th. February 9th, Novo Nordisk sues Hims and Hers. And then February 9th, Hims and Hers says, hey, this patent is a blatant attack. And then on March 6th, Hims and Novo, they end the feud, and now they're going to sell the drug together, right? So this all happened in this first quarter. And then they just started selling the Wegovy on March 26th. Their numbers only represented January, February, March. They had to change so much in this first quarter, from their logistics, the shipping, to the product, right? They stopped making a product. Now they have to third party buy the product and do this whole thing. And then there was a point where they weren't selling probably anything. They probably stopped compounding completely, but maybe weren't able to sell the Wegovy yet. Right? There might have been this time this lapse of time, whatever you want to call it, of just they weren't able to really do anything. The compounding, they couldn't do anything. They settled with Novo, right? So maybe part of the settlement was like you can do the compounding, but if you're transitioning people off the compounding and into this, you're stopping. You're stopping business probably for a week or so, a few days. You're doing some of that probably. So we have to just keep all of this in mind, that the first quarter was very intense for them financially, logistically, and also on a brand, right? Socially, like getting sued, and because you don't want to sell Wegovy, you'd rather sell your own. People started to look at that as like, okay, Hims, why don't you want to just do that, right? Why don't you just want to sell the most popular product that people find as the safest product? So I think it started to go against them, seeing that they're being sued and all that stuff. So now that they've made this deal, things I think can start getting back into play, right? Their marketing, when you see their marketing went down 4%, that means they're not marketing as much, right? Well, when they start bringing back the marketing again, I bet you their revenue will go up that much more too. So we just have to keep, again, all of these things in mind. International, it went up 10x, about 1,000% year over year. You got Zava and Eucalyptus now about to go into full-on mode. You have Hims and Hers Canada, Honest Health. So you have all of these things going on internationally. That was really good. And they also mentioned AI support across the entire, this is just whatever, right? They're saying they're going to, put an AI in there to help, communicate and stuff with you. I will say this, I'm a subscriber myself, a recent subscriber, and I'm trying to figure out, okay, how good is this platform? How good is their service, right? I'm an investor, I'm making these videos, and I should know as much about the product as I can. So I decided to be a subscriber, figure out some kind of medication I could take or want. I took the blood test, and they say, okay, this is what you're low on, you're high on, medium, whatever, regular. And I'm wishy-washy about it, to be honest with you. And a lot of it also has to do with the messaging and the communication a little bit. I'm trying to get certain questions answered. I'm not getting them. So we'll see. We'll see exactly. But people were like, mention AI, because if you just talk about AI, they have AI when it comes to finding peptides and finding medication and stuff like that, right? But we already know that. So there's really nothing new in AI for Hims. So now let's talk about the future of Hims. They have all these recent acquisitions. The outsourced, the 503B compounding facility. They have the lab facility, peptide facility, the Your Bio, which is going to be doing the blood sampling at home. You have Zava, H&H Canada, and Eucalyptus all going international. So they're making a lot of investments this last year or two to really boost their future, products, future results, everything. So they're investing, a lot of investments going on. Their financial outlook for the second quarter of 2026, they expect a revenue of $680 million to $680 million to $700 million. That's 16% year over year. That's better, right? Better than 4%. For the full year 2026, they expect revenue of 2.8 to 3 billion. That's about 19% year over year. Not amazing numbers, but their first quarter was trashed. January wasn't too good. Then February they got sued and they had to stop compounding and go through that whole thing. March they had to continue to go through all that. Now finally in April they have been able to, kind of, okay, let's get on the right track. And even at that, they're still dealing with some logistics, but first quarter was pretty bad. Based on the 2020 the earnings call, the operational transition is effectively complete, though financial normalization will continue through late 2026. So this is basically like the Novo deal and having to, change everything. The shift to branded GLP-1s was executed in March 2026. Customer migration substantially complete. Almost all new business is now onboarded directly to branded products, right? So they're all now on there. Financial stabilization is in progress. The financial transition, absorbing these lower margins from branded drugs, will impact earnings until the second half of 2026, with a return to full profitability expected in 2027. So what does that mean? Does that mean the next 3 quarters of EPS won't be able to beat the negative 40 cents? Are you telling me that you are going to not be profitable in 2026? That's possible. Just keep this all in mind. The marketing transition, basically complete. Hims & Hers strictly discontinued all advertising for the compounded products. Marketing spend has fully reallocated to the branded portfolio, and the messaging, the value proposition has shifted from having accessible compounded alternatives to now the broad access to the FDA approved medication. Again, it makes people feel safer, right? That you're not trying to go into a gray area. Even though it wasn't necessarily gray, people would perceive that. Logistics and supply chain, the transition is basically complete. The internal assets, decommissioned. The company took a $33 million write-down in Q1 related to its compounding supply chain assets, signaling a decisive end to mass-scale internal production for this category. Sourcing. Externalized logistics have now shifted to from internal manufacturing to direct distribution partnership with Novo, right? So essentially now they're just going with Novo. The shipping cadences, availability, branded medications are now available, right? We know that fulfillment, shipping is now standard, commercial. It's not the compounded custom vials. And then the exceptions, compounded GLP-1s are now only shipped on a clinically necessary exemption, meaning the mass market shipping cadence for compounding drugs has effectively ceased. So they're not doing any more of that. We're now going to be just all about the Novo GLP-1 when it comes to that. Peptides. Peptides are what everyone's talking about right now, though, when it comes to Hims, right? Peptides. Okay, right? A quarter ago, 2 quarters ago, everyone was talking about Novo. That's all everyone could talk about. GLP-1. Now everyone wants to talk about peptides. So let's go over exactly what peptides are and why they're the future. So they have precision targeting, right? These peptides, they mimic natural signaling molecules, and they have very few side effects. They have lower toxicity because they're made of amino acids. They break down into harmless natural components, unlike some chemical drugs. And then they also have faster development. Peptides are often easier and cheaper to design and produce rather than the larger protein. Number one, the big one is going to be able to take it with a pill, right? We have the oral semaglutide, which you can do, but you have to do it every day rather than once a week with the shot. And then, of course, innovation. Scientists are developing all of these different smart capsules that'll help. So when it becomes easier to take rather than having to shoot it, it'll be a lot easier for people. Peptides are being engineered to cross the blood-brain barrier to treat previously untreatable conditions like Parkinson's and Alzheimer's. So these are big deals, right? If you can develop a peptide that can cure Parkinson's or Alzheimer's or even help in any way, that's really good. So peptides, again, that's another positive. Also, if you've heard of this superbugs, right, that are basically, they go against our a lot of the drugs and the antibiotics that we give them because they're developing a resistance to them. Well, peptides actually, it makes it harder for those bacteria to develop a resistance. So you can actually have some peptides that are like antibiotics. And then you also have AI-driven discovery, which AI can reduce drug discovery timelines from years to just months. And then customization, it also allows personalized peptides. So, you have someone's genetic markers and you can customize a peptide to those markers. Oh, battery's gonna die. The peptide market is currently undergoing a massive gold rush. Over the next 10 years, it's expected to more than double. It's gonna go from 80 to about 140 billion up to 295 to 335 by 2033, right? So it's expected to kind of blow up over the next 10 years, which is good. The FDA just came out and said they're going to have a meeting. They put, I believe, 14 peptides into category 2. So basically you're unable to compound it and, pharmacies are unable to do a lot. Now if they can go back to category 1, it allows the pharmacies like Hims to compound these peptides and actually do something with it. If we look at the interest in peptides in the last year, you can see it's gone up a lot. In the last 5 years, it's gone up a lot in the last year, but it's gone up a lot. And then since 2004, I mean, look at that. A lot of it is GLP-1, that is a peptide, but there's also other peptides that people have been getting really excited about that help with your muscle and just all kinds of other stuff. Recovery. Talk to people who have had surgeries and stuff, and they've said, oh, I was looking into this peptide, this and that, but it's a great market. So people are still a little hesitant for it. And if you haven't heard, Andrew Dudum, it wasn't on the earnings call, he was doing a podcast, but he essentially said Hims is going to be a peptide company. That's what he said. He said, in 1 year, I wouldn't be surprised if you call us a peptides company. Right now, you call us a GLP-1 company. Next year, you're going to be calling us a peptides company. So that's possible. For the stock, we all know it's going to end up around here when it opens tomorrow. Or if you're watching this today, whatever. After the earnings, it's going to open up lower. These are the last few times it also released earnings. It goes crazy. And I mentioned this. If you cannot stomach these wild swings, don't be in Hims. Don't be in Hims. If you cannot buy in this range and think, you know what? In 10 years, I know even though it's going like this right now, it's going to just continue to go up and eventually it's going to be up here. Eventually it's going to get up here in 5, 7 years, 10 years. It's going to move all the way up. It's going to continue to go up. I mean, you'd hope it doubles up more, but the way that Hims is growing, I do think it will. The way it's grown, the last quarter of growth wasn't great, but the way it has grown over time, I think it can do so. There's some cons that like I said, I'm an active subscriber. I'm a current subscriber, so there's some stuff that I look at. I'm like, I think they can do better on. But other than those couple things, I think it's doing very well so far. I just became a subscriber, so I have no positive effects from the medication yet, so we'll see. But yeah, that's what I kind of think is going to happen. Thank you for watching. Please give a like and subscribe. I really appreciate everyone who is still watching right now. Oh, did I forget? Oops, yeah, I forgot to put this on there. Yeah, I appreciate everyone who's watching. And yeah, Hims it's a volatile stock. It's a volatile company. And so you just have to stomach it. You have to stomach the investments that they're making and how crazy it's going to be. But Novo made a deal with them. That's good. One thing people are not thinking about is that GLP-1 is going to be absolutely patent free in 3 years, in 2030. Hims at that point, we're talking 4 years down the road, will not have to deal with any of their margins will go up substantially. We're talking in 4 years. But if they can continue to have a good running business and continue to increase their business and grow their GLP-1 business with the peptides business, and then all of a sudden you have a catalyst of you already are growing, you have a good business, and now you have a catalyst that makes your business even better, I think that's great. So that's looking way too far ahead, kind of, but you want to look ahead a little bit. So I think Hims is, I said this in my last video. I said, if they put out these types of numbers, which they did, I said single digit, low, double digit, anything like that, investors do not want to see that. I did not think the EPS was going to be negative 40 cents. If I knew they were going to do that, they completely missed on that. Investors thought they were going to be positive, profitable. And they were negative. And I'm not shocked at this move at all. I am not shocked. In fact, when they released their earnings and I was going over it, stock was only down like 5%. It was down like 5, maybe 8%. I was like, that's actually not that bad. I actually was saying it's not that bad. For these numbers, that's not that bad. And then it went down to 13. I was like, okay, there we go. It could end up minus 15 to minus 20% tomorrow. It could. It really could. Because those were some bad numbers. Those were bad numbers that people are watching AMD and watching Micron and watching Intel and watching all these stocks go up. Amazon, all these stocks, Google hitting all-time highs. Why are you gonna want a company that's going from profitable to reporting a loss? Someone that's can't even grow their US revenue. Why would you want to invest in that company? right? So this is where the stock price is going to get hit. You're going to have a lot of people looking to sell rather than buy. One thing I thought about, or I was taught kind of, and I heard, and it really stuck with me, was a major thing about a stock and the price really is, are you going to have more buyers or sellers? Which one? Those numbers that they put out, you're going to get more sellers. You're not going to get more buyers until you have another catalyst, something to come out. With those numbers, what's going to change? Who's going to want to buy a company that has those numbers? You're probably not. Now, eventually the short squeeze could happen. Something, the stock market's very emotional. We all know that. So anything could happen. But I'm worried that there's going to be a lot more damage than what was in after hours. I think the minus 13% is not going to be the full deal. Eventually it's going to recover. Maybe in July. I mean, it's beginning of May. So at that point, at the end of July, they're going to be announcing their second quarter, right? So, you might really see HIMSS struggle to get past 30. You might not see HIMSS even get past 30 until their next earnings. That might happen. So if that happens, that means my portfolio is not going anywhere for a few months, which kind of sucks. But I'm not buying any more shares. If it goes under 20, I'm buying some shares. If it doesn't go under 20, I'm not buying any shares. I'm buying shares of other stuff. And that's that. So yeah, again, thank you for watching. I really appreciate it. And it's a doozy. Today's a doozy for HIMSS, but in my opinion, they're going to recover eventually. And long term, they'll be fine. But it's going to be hard for right now. So yeah, thanks for watching. And never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities. And you can count on compounded interest.